Hi. Every now and then, an obvious sleuthing target pops up. A target, mind you, not necessarily a buy. This would depend on the sleuthing results. Well, this one popped up a few days ago when I logged on to the Ontario government website to dissolve a holding company. I used to have several holdcos when I was running money, but when I semi-retired, I dissolved all of them. Or rather, I thought I did. One was missed. So I logged on the government website to close it. Only this time I couldn't. Why? Because the writable PDF on which one can type details is a new PDF format by Adobe, and the government just updated it. So I had to update it on my browser too, which uses its own PDF reader, because the government no longer accepts PDF readers by others than Adobe. It took a while for my PDF reader to be upgraded, but as it did, it got me to thinking. That's a strong business franchise for you. I mean, not only does Adobe have the biggest market share, but some of its customers can apparently force browsers to uninstall their own plugin reader and install Adobe's. Wow, I thought. And this likely happens not just in governments, but with anyone who creates visual files on the internet, which today is almost everyone, because after COVID, much more business is done online. Years ago, most online business was done with numbers and words. That is Microsoft. But these days, with the level of education coming down, pictures and images are the things that work. That is, all who need image making need visual tools, not just text and numbers. And who is the biggest internet visual tool maker? Why, Adobe. So as the ePDF kept installing, I looked up the tools Adobe has. Well, wow, there are a lot. Photoshop, and Acrobat Pro, and Illustrator, and Premiere Pro, professional quality video and film editing, and InDesign, page design and layout for print and digital media, and After Effects, motion graphics and visual effects for TV and websites, and Dreamweaver, modern and responsive website design. I mean, wowza. This is just the tip of the iceberg. It seems Adobe has the biggest creative content toolbox on the internet. So any internet professional who does photo editing or web design or a print layout or video editing needs them, for which today he'd probably have to subscribe to Adobe's Creative Cloud for a monthly fee of more than $50. Just like Amazon Prime or Netflix or any other such subscription service, only more expensive for Adobe because it's for business, not for home. In effect, Adobe seems to have become the Microsoft of the visual world, only with a monthly subscription. Who are the users? Well, I'm not knocking Adobe's customer education, but basically, while Microsoft serves the literate and numerate crowd via Word and Excel, Adobe's toolbox serves the new generation of the non-numerate and non-literate. That is, those who do not read much and do not compute, but can still see and hear. That's why TikTok and YouTube grow so fast. And if you want to put anything on them, you probably got to use Adobe. So, why am I pointing all this out today? For two reasons. First, because my experience in closing a holdco proved to me the increasing strength of Adobe's franchise. But second is Adobe's stock price. In the past, Adobe always came up highly on my company greatest indicator, the sum of its gross margins, return on equity, and sales growth. But it never came up as a straight out-and-out buy because its EV to EBITDA, my preferred ratio showing how expensive the stock is, was always too high for me. So when I divide the greatest indicator by the EV to EBITDA, the ratio, which the stock greatest indicator, as I call it, was always too low. So the stock always seemed too expensive for me, just a little bit. You see, in my heart of hearts, I am a value buyer. I like to buy them cheap, even growing stocks. So, out of curiosity, as I filled the government form, I also took a side look at Adobe's price. And what do you know? Over the last year, the stock has fallen almost 60%, more than the market fell. So when I now ran the latest EV to EBITDA ratio, the stock suddenly came out not just as a great company, but also as a potentially great value. potentially, mind you, subject to sleuthing and due diligence. So next day, I placed a few phone calls and sent emails to friends who do internet business, build websites, do video presentations, and other internet stuff. How many of you are using Adobe, I asked. Almost all of them. How many of you would switch if the company raised prices? Almost none. I said, interesting. So the business is great, the company comes up terrific, and the price now is also good. But wait a minute, how come the price is good? Why did the stock fall so much? Well, it seems Adobe had made an acquisition, an Israeli company called Figma, a very strong competitor for which it paid up, which is why the stock is down. The purchase price was about $20 billion, half in cash and half in Adobe stock. So the share dilution is probably why the stock plunged, and also doubts about whether the deal is good. First question then, can Adobe finance the deal? Oh yeah, easily. Adobe free cash flow was about $7 billion per year last year. Figma is probably a net cash generator too. So the second question is the acquisition a good one? Based on the initial chats, initially it probably is, but only probably. Figma competes with the growth segment of Adobe by allowing web designers to make even better interfaces to interact with users of the internet. So it competes directly with Adobe's product called XD. But why is this product segment important? Because every day, about 250,000 new websites go live on the internet. 250,000 new websites. Yes, some are made automatically by content management systems like WordPress, but many also need professional touch. It's this part that Figma here does a bit better than Adobe. Also, it works on more types of devices. However, post-acquisition, all of Figma's advantages are part of Adobe's Creative Cloud subscription. But isn't an acquisition usually risky? It usually is. But keep in mind that Adobe isn't buying Figma for future growth that it itself doesn't have. That would be bad. Adobe has enough growth of its own. Rather, it is buying out Figma as a threat, and so it moves up in the quality level so it can raise price in the future, especially with a fuller suite of tools. Based on this and some of my initial chat, Adobe seems to have future pricing power. But what really made me sit up and take notice is the fact that Adobe has margins as high as those of Facebook, Meta today, Microsoft, and Google, called Alphabet today. And yet its market capitalization is much smaller. How much smaller? Well, Microsoft has a market cap of 1.8 trillion with a T. Facebook, Meta, 1.3 trillion, and Google Alphabet, about 1/3 of a trillion. What about Adobe? A measly $130 billion, or 1/3 of Google, 1/10 of Facebook, and 6% of Microsoft. Therefore, it would be much easier for Adobe to grow fast than these other behemoths who are already huge already. Large institutions, by the way, such as pension funds or mutual funds, would be able to see Adobe as a junior Microsoft with an easier growth trajectory. And don't forget, since it went public in 1986, Adobe outperformed the market handily, not easy. Still, the question remains, will Adobe be able to absorb the acquisition? This remains to be seen. And of course, the final question, is the stock a buy? Again, not so fast. Yes, Adobe as a company has passed my corporate greatness indicator. And now, with the lower stock price, also passed my pricing indicator. However, that's only the first stage of investing, the sifting. Now comes the crucial stage, personal sleuthing. And by personal, I mean you. Before you consider Adobe a buy, or any stock for that matter, you should do your own sleuthing. Talk to users of Adobe's products. Ask them about their experience and whether they are happier now than before after the acquisitions, and whether they had switched if Adobe raised prices. The government sure isn't switching, but maybe others will. As I said, do your own sleuthing. Only when you do can you hope to take the money of those who don't. What else does sleuthing involve? Go buy my book, The Sleuth Investor, and see the entire method for yourself, plus examples. That's all for today. Please let me know in a comment below what you think of the above. Subscribe to the channel. Tell all your friends about it so they'll subscribe too and hopefully buy the book. I'll see you next time. And meantime, thank you very much for watching.